Welcome to the Capital News. I am your host, Alex Corritis. Today is Thursday, May 28th, 2020. Thank you so much for joining me. The title of today's podcast is Trade Deal or Economic Warfare. Which is it, folks? Today is Thursday, so we have an update to the Federal Reserve's balance sheet. We also have an update to the initial jobless claims for the week prior. We also have the second revision for the first quarter GDP figure, so we're going to talk about that, market performance. The crux of today's conversation is going to be a follow-up to yesterday's podcast, Trouble in Chinatown. Very timely. We said we were going to get back to that discussion around the legislation that was being brought forth in Beijing that related to Hong Kong. Just by happenstance, happened to be the case that shortly after podcast yesterday, last night, China passed that legislation that affects the autonomy of Hong Kong. So China passed it, okay? Tomorrow, Donald Trump is scheduled to make comments because he had threatened China not to pass that legislation. Well, when you threaten somebody and they do something when you told them not to do it, unless you want to look weak, you're going to have to do something. Now, the question is going to be, what is the president and the United States government going to do in response to the Chinese passing this legislation? Because we talked about yesterday on that podcast, Trouble in Chinatown, that the Secretary of State, Mike Pompeo, said that the United States basically does not recognize the autonomy of Hong Kong anymore because of the actions undertaken by Beijing with respect to this legislation. This thing could get out of control very quickly. We had several months of Hong Kong protests prior to COVID-19. They have taken place again. They started up last week because of this proposed legislation. It is now passed. So they are most definitely going to continue to protest. For many of these people, they may feel, and rightly so, that this is truly a matter of life and death. Their autonomy is at stake. Their liberties, their personal freedoms may very well be at stake. What will Beijing do? Time will tell. What will the United States do? Time will tell. We might get a glimpse into some of the thinking, at least from the president, as to what we will do, at least initially. But I highly doubt that this is just going to be a simple tit for tat. Beijing passes legislation. Donald Trump attempts to make good appear like he's not weak. So he's going to play the strongman position, as we've been stating that he would, in conjunction with so many other quote-unquote global leaders around the world. So this is going to get interesting. Politically, on domestic fronts, geopolitically, on the international front, and economically, also on the international front, because as we stated yesterday, in relation to the GFC, the Great Financial Crisis, the housing bust, a lot of people are unaware of this little fact, but Iceland was one of the catalysts. It was one of the first movers to get all of those dominoes that were set, to get them going, knock them over. Most people don't realize that. It doesn't have to be a major country, a major corporation that fails, that goes into bankruptcy, that gets caught in accounting fraud, what have you, to pop a bubble that is extremely fragile. And of course, the bubble has already been popped, COVID-19, in conjunction with some other things. But don't discount the fact that Hong Kong is another major domino. We've been talking about it for months. And I am still beside myself that they have not collapsed as of this date. We have the currency peg tied to the US dollar that we've talked about in previous podcasts. If that peg is broken, and pegs have broken in the past, it is not going to be a pretty picture for the people of Hong Kong. And because of the importance of Hong Kong as being a financial gateway and a financial hub, especially for China, to the rest of the world, it's not going to be pretty for the rest of the world. Very important stuff taking place. A lot of things are coming to a head. So despite the rhetoric from the President of the United States, Economic advisors, Larry Kudlow, trade deal, phase one, beautiful, best deal ever, everything's fine. Have a beautiful relationship with President Xi. Everything's great. COVID-19 is under control. Had a conversation with President Xi. They know what they're talking about. Everything's fine. Now the blame game's coming. That phase one trade deal was a load of crap. We were all over that here at the Capital News. There is no deal. There was no deal. It was a photo op. It was an attempt by the president to save face. All of these headlines being jerked around for a year and a half. Okay, it's coming. It's great. We just got to get a little tough here, do this, that, and the other thing. Bunch of hogwash, bunch of nonsense. In the deal, I use that term loosely, obviously, just took us back to where we were 2 years prior, before all of the shenanigans took place. And now there are major concerns, at least from the American perspective, looking out for U.S. farmers, that business might be gone forever or for a very long time, as we said was likely going to be the case. Why? Because China has 1.4 billion mouths to feed. And they're not going to wait for some phase one trade deal, phase two, phase 26 and a half to go looking elsewhere for agricultural products. And guess what, folks? The Chinese did just that. Argentina, Brazil, Russia, handful of other countries picking up that business that used to be here in the United States. And I would imagine, so long as those other countries can meet the demand, China's not going to come back here anytime soon. Why would they? Especially if this is not a trade deal and it's actually economic warfare, which I believe is what it most likely is the case. Because neither side, the United States, China, neither side wants a kinetic war. I'm not even 100% certain either side really wants economic warfare either, but that's the lesser of two evils. That's what they're going to go with. You have economic warfare, you have cyber warfare, you have bio warfare, and you have kinetic warfare. There's no ifs, ands, or buts that this is economic warfare in my mind. There's no question that there is cyber warfare taking place behind the scenes on both sides. COVID-19, it's going to be very interesting to see how this gets played out. Because both sides are already blaming each other, that each side created it or was responsible for letting it loose. We're never going to know the truth. If we do, it'll be a miracle. But we're going to be told stories, and that's going to be the story that's used to justify whatever actions either side takes. So be very skeptical of everything you hear moving forward. You should have been skeptical to begin with. But now especially, with this blame game, with the world's two largest economies going at it, you better be skeptical of everything you hear, because we've been lied into war before on many occasions. It is likely going to happen again, because everybody wants to be the strong guy. Everybody wants to be tough, until it's your 18-year-old who comes back home in a flag-draped coffin. I don't want it. You shouldn't either. So be tough, but maybe you better put your boots on and go do the fighting. We can't afford it, and we shouldn't want it. Market performance. The markets were in the green today for most of the day, until news came across the wires that Trump was going to make comments in regards to that legislation. Sold off rapidly at the end of the day, and the major indexes closed down for the trading session. However, overnight markets, relatively flat. Dow Jones Industrial Average is in the red, but relatively flat, down 22 points. S&P 500 relatively flat, but in the green, up 2 points. NASDAQ 100 up 0.3% at the time of this podcast. Cash trade over in Japan, trading down 0.33%. An up day across the board in Europe, a continuation of their rally, anywhere between 1 to 2%, depending on the index. Cash trade in Australia down 0.8%, flat in China. On the commodity front, we have WTI trading at $33.19 a barrel. Brent trading at $34.95 a barrel, down both for the day pretty much on the back of some fundamental news with a surprise increase in buildup, so prices came down slightly. Natural gas is trading at $1.81 per million British thermal units. Gold and silver both held their own today. Again, geopolitical noise, place to be. Precious metals. Gold trading at $1,720 an ounce. Silver, $17.40 per ounce. Uncle Sam's 10-year Treasury note yielding 0.67%. To the U.S. GDP. The second reading, of course, the first preliminary reading was a contraction of a negative 0.48%. Second reading is now negative 5% even. Negative 5% even for the first quarter of 2020 here in the United States. Of course, the second quarter is expected to be the worst. Predictions going all the way below negative 40%, which would be the largest contraction since the Great Depression, which I think at the bottom of that was about negative 33%, if memory serves me correct. So we could outperform, which is not a good thing, the depths of the Great Depression. U.S. corporate profits fall the most since 2008. Corporate profits in the U.S. plunged 14.2% in the first quarter after rising 2.1% in the fourth quarter of 2019. We have Japanese retail sales sinking 13.7% on a year-over-year basis. Japanese industrial production plummets 9.1% on a month-over-month basis. Not looking good, folks, but of course, this is not to be anybody's surprise. Global economy shuts down. These are the numbers you're going to see. To the Federal Reserve's balance sheet, gaining an additional $60 billion on a week-over-week basis. The Fed's balance sheet now rests at $7,097 billion. So a little bit of a slowdown, a little bit of a leveling off, up $60 billion, again on a week-over-week basis, but still north of $7 trillion. And still, for a context, we discussed this last week, and I'll continue to do it so everybody understands what's going on here, a little bit of perspective, because when you're throwing these numbers around, I mean, it's laughable. I mean, the rounding errors are the net worths of the planet's most wealthiest individuals. So, for a little perspective, quantitative easing number 3, about $85 billion per month. QE3, $85 billion per month. Week-over-week basis, up $60 billion. See what's going on here? This is exactly what we said was going to happen last year. Check it out on the Capital News. Are central banks trapped? The answer, yes. They had an out. They could have been leaders. They could have been forthcoming. They could have told us the truth. They could have manned up and said these policies are ludicrous. They don't work. We gave it a shot. We thought they were going to do the trick. They didn't. Back to the drawing board we go. Here's the plan. Here's how we're going to get out of it this time. Didn't do it because they're never going to admit fault. They're never going to admit or predict recession until we're in one. They're never going to say we are out of ammunition because Jay Powell was telling CBS, 60 Minutes, the Senate Banking Committee, many tools in the arsenal. We are not out of ammunition. Of course, he is going to say that. There is no way he is going to come out and say the Federal Reserve is out of ammunition. But if you read between the lines, what has Jay Powell and other members of the Federal Reserve been suggesting? They have been suggesting that the federal government does more. So to me, that tells me what we already here at the Capital News have known for quite a while, that the Federal Reserve is out of ammunition. There's only so much they can do. They can only help a liquidity crisis to a certain degree. They cannot help with a solvency crisis that we are just waiting to see. It is underway, believe me when I tell you. There's only so much they can do. Their tool is a hammer. Everything looks like a nail. So they are asking Congress or suggesting to Congress in the White House, please do something else. Please do more. We will gladly finance it because we have a fancy printing press and because we can just enter the keystrokes, comma 000, comma 000. Happy to do that. But there's only printing money only does so much. But we can finance what you guys want to do. Whether that's giving money directly to people, bailing out more industries, whatever you want to do with it, because they're not going to give any guidance. Because Jay Powell's always asked that question. Well, okay, you made that comment, Mr. Powell, that the federal government should do more. Can you elaborate for us, please? No, that's not my territory. That's not my domain. I don't want to step on anybody's toes. But please do it. Wink, wink, nod, nod. We will bail you out. We will print the money for you. But you have to come up with something more. And rest assured, ladies and gentlemen, that the federal government will do more. It's going to cost you. It's going to cost you big. It's going to cost your kids big, your grandkids, your great-grandkids. Big. Big money. Okay? Free was never so expensive. Moral hazard all over the place. And what did all of those members of the Senate Banking Committee do when we talked about that hearing last week or a week and a half ago, whenever it was already? They all went after Mnuchin, because Mnuchin, the Secretary of the Treasury, he's a political appointee, but he's really a member of the administration. Now, Jay Powell, of course, is also a political appointee appointed by the president, but he's not really a part of the administration. He's sort of, doing their own thing. They're quote-unquote independent. So everybody attacked, especially the Democrats, attacked Mnuchin. But Powell, everybody kissed his rear end. Why? You know why. Because he facilitates all of their insanity. He finances all of this madness. And none of those politicians want to go back to their states. They don't want to look at their constituents in the eye and say, hey, you see all this madness? You see all this mess? You see the fact that we've all lived beyond our means for too long? Well, we're going to have to pay for it, and we're going to have to raise your taxes. I know you lost your job. No, you're probably not going to get it back, but we're going to have to raise your taxes. Just going to have to do it. How do you think that would play? Not very well. Not very well at all. But if we can put the printing press to use and increase your taxes through another way, the hidden tax of inflation, well, then by all means, Mr. Powell, do what you got to do. We'll come up with it. Thank you so much for being here. Look it up if you don't believe me. Senate Banking Committee, Jay Powell, Stephen Mnuchin. They attack Mnuchin, and rightly so, and they praise Powell incorrectly. They both should have been attacked. This is madness. And of course, the senators should have attacked themselves, but they're not going to do that. No bailouts, but it's too late. It's too late. Horses out of the barn. We're borrowing $3 trillion just for the second quarter alone. We know that the Federal Reserve, according to Goldman Sachs, is going to be buying about 70% of it because nobody else wants it, because Uncle Sam's bonds are junk. Nobody wants them. So Jay Powell's got to buy them all. He doesn't have the money either, but he's got a printing press. So everybody's getting bailed out. The states are they are going to get bailed out. Corporations that squander their resources are going to get bailed out. Already have been. That'll continue. Federal government is going to get bailed out. Who's going to own it all? The Federal Reserve. They'll have everything. They'll have it all. What a system. Federal Reserve balance sheet, $7.097 trillion and counting. This will go up, and away. Believe me when I tell you. Initial jobless claims came in for the prior week at 2.123 million. Again, initial jobless claims for the week prior at 2.123 million. This was relatively within market expectations. This takes the 10-week total to about 41 million Americans losing their jobs over the past 10 weeks. Truly stunning. Continuing claims, however, came down a little bit, which is a good thing. Now standing at 21 million. There's still a lag on that, so we will continue to keep you updated when those new releases come out as well. But the continuing claims stand at 21 million, down from the prior week's reading. People are going back to work. Economies are opening, so that makes sense. You also, of course, have anything related to the Payment Protection Plan, the PPP loans that were out there, with the contingency being if you're going to accept this loan and you want it to be forgiven, you're going to have to bring back your workforce. So, of course, that would have an effect on continuing claims. So that's where that stands. So getting back to sort of the crux of today's podcast, again, the Chinese legislature has passed that bill that relates to the autonomy of Hong Kong. It's going to get very hairy. Very, very hairy, very quickly. Again, we talked about the United States having some arms deals with Taiwan, which is also another area where China thinks that Taiwan is its territory. Taiwan says, no, I don't think so. There are treaties in place, I do believe, where if something should happen to Taiwan, the United States is pretty much pledged to support and defend Taiwan. To what degree, I'd have to go and look at the treaty, but I think it would be militarily. It would definitely be something that would have to deal with a strong response, make no mistake about it. It's going to be very interesting, as I said at the top of this podcast, what the president decides to do. There's a handful of things he can do. This is, of course, his first move is not going to be, I wouldn't imagine anyway, is not going to be anything that relates to some sort of military strike or any type of military component, but it's going to be economic warfare. We've been witnessing economic warfare. That's what the trade war is. Not was, is, because it's continuing. It's what it is. It is part of the economic warfare strategy. Other things that might be at play are currency devaluations or trying to get it to appreciate, trying to get businesses to leave China. China, of course, is probably going to play on other countries in the area that are say, hey, you're highly dependent on us, side with us, don't go with the United States of America. China has already slapped some tariffs on Australia, which is very interesting because Australia is obviously a Western-minded country, much more in alignment, at least culturally speaking, with the United States and with Europe as opposed to China. But guess what? China is responsible for keeping Australia out of a recession for the past 30 years. So now it's going to come down to, I think, a debate, some type of discussion within Australia. Okay, here we go. We have an ideological battle and a cultural battle. Do we stick and stay loyal to the United States and to Europe because of that linkage? Or do we look at our pocketbook? Can we have both? They have for the past 30 years. But now, is there a fork in the road? Are they going to have to make a decision, they being Australia? Yeah, we'll align ourselves with Europe and the Americans, or yeah, we love you guys. We think all this stuff is fantastic. We're going to continue to honor those traditions here in Australia, but we need to make a living. All of our natural resources, United States, Europe, especially Europe, you're aging, you're slowing down, not a lot of infrastructure, there's not going to be a lot of spending, not going to be a lot of demand for our resources. But China, rest of Asia, yeah, they're going to need us because demographics are in their favor, especially the rest of Southeast Asia, not necessarily China. But they're still going to do a lot of building. There's still a lot of people living in rural communities that are trying to make their way up into the middle class. Going to get very, very interesting to see how this plays out. Everything is interconnected one way or another. Not to mention, if this thing really gets heated and you see some type of war, what will then happen to the price of commodities, particularly oil and natural gas? How will Saudi Arabia play this? Who will they try to benefit? Right? The petrodollar system. Their big customer is China. A partner who has been supportive of them and who has defended their interest, us, the United States. Who will they side with? What's Vladimir Putin to do? He has all of those reserves. Is he going to just simply flood the market, give it to China? Or would he be concerned if China should actually somehow win or become more powerful after the fact? Because now he would have a major superpower that is growing in his backyard. Would he like that? Of course, this is all speculation. I'm just trying to get the audience to think about the downstream effects of all of this. And this, again, is just from China passing legislation, is how it relates to Hong Kong. because Trump threatened him. We're going to see what his response is. Is it tit for tat? Is it going to truly be a strong response? Or is he just going to sort of flex his muscles, but it's just hot air, more or less? It's not really muscle, it's just hot air. Time will tell, but if he looks weak, and if it actually is weak, then you can imagine that the Chinese will continue to push the borders further and further until there is some sort of harder pushback. But you never know. Trump's one to surprise. Maybe he gets very tough. We'll wait and see what happens. On another front, this is more domestically, Trump also put into place an executive order dealing with social media, because Trump has been throwing some outlandish claims out there that Joe Scarborough, the former Republican congressman from Florida, now a news broadcaster on MSNBC, basically accusing him of murdering an intern or one of his staffers several years ago. He's just been throwing these notions out there time and time again. Of course, the widower of this woman who died has sent a letter to Twitter saying, "Can you please stop this? This is affecting me personally. You know, she wasn't murdered," all this stuff. And of course, now Trump is not apologizing or taking any of this stuff down, but now Twitter is putting some fact checks in response to these tweets, and I think a couple others. So now you have this big conversation coming to a boil. What is Facebook? What is Twitter? What is YouTube? Are these public forums? Are these town squares where people can go stand on their soapbox and say whatever they want? Or are these really private companies and they have the ability to restrict, restrain, do a whole host of things? It's a very interesting question. When you look at Mark Zuckerberg, the CEO of Facebook, he says it's not our job to police all of these comments. You know, at least logistically, I happen to agree with him. Because how is a company like that, YouTube, Facebook, Twitter, that has millions of users, millions of posts loaded to their respective website, if not billions, on a daily basis, how are they supposed to police all of those comments and then determine what is factual versus what is not factual? And do we want such power to be placed in those institutions, in those corporations, where they're the final say as to whether something is true or not? That is an immense amount of power to be placed in the hands of corporations who are really accountable to nobody. Not the American people. They're not voted in. Yeah, they're shareholders, but you know how that goes. So this is very dangerous. Very dangerous, very interesting question. What the president did through his executive order is, there's nothing really legal that's going to happen from that in and of itself. Whether legislation is put forward as a result of it, and if legislation is changed to sort of put these companies in restraints, that will get interesting. I don't know what's going to happen. I really don't. I just know logistically, I don't know how these companies can possibly police all of these statements. I would rather there be a president of the United States who doesn't lie to the degree in which he does, that brings this conversation to the fore. I wish the mainstream media did more investigative journalism like they're supposed to, and didn't make everything about opinion and editorialize everything and make facts and opinion just blur those lines to the degree in which they do. And all of them are guilty. Fox, CNN, MSNBC, everybody puts their opinion in their news coverage. If you're somebody who is an editor, an opinion columnist, well, at least you know that's the case. But so many people turn on the quote-unquote news and they hear and listen to what they want to listen to. It's not necessarily just the facts, Jack. Just the facts. No, it also has to come with the opinion and the analysis. Okay? I'm not a journalist. I've never claimed to be one. You're getting my opinion. You're getting my analysis. You can like it, dislike it, agree with it, disagree. That's what this podcast is all about. But when you look to those news organizations, they have an obligation to give us the facts in the proper context. They want to have programs that do the editorializing. That's perfectly fine, as long as everybody understands that that's who and what they are and that's what they're doing. Perfectly fine. When you start blurring those lines, it becomes very dangerous. There's a very slippery slope. We've already gone down the slope. This has been the case in the U.S. media and politics for years. This is not new. What is new is the President of the United States using social media as his main platform to get his opinions out, to get his statements out. A lot of them are not true. A lot of them are not true. If the president was so concerned with transparency and getting his message out, then maybe he should have had Stephanie Grisham, his former press secretary, actually give a daily briefing. But she didn't, did she? If the president's so concerned, he has that forum. And if he doesn't trust Sean Spicer, Sarah Huckabee Sanders, Stephanie Grisham, Kayleigh McEnany, well, you know what? Since he loves being in front of the camera so much, then he can go out there every day and do his own press conference. And he can actually take questions from the press corps, because having a conversation on Twitter and making statements on Twitter does not do anybody in this republic any good. You cannot have a full-throated conversation, debate, discussion on Twitter. You only have so many characters. Your space is limited. Your time is limited. And he throws bombshells out there. And he knows it. So why won't he just go and give press briefings on a daily basis if he's so concerned about fake news, fake news, fake news? Go out there and give a legitimate argument. Go out there and elevate the debate in this country about whatever you want to discuss, Mr. President, because you have that right. But take some hardline questions from the press corps, because that is their job. It's not their job to praise you. It's not their job to say, fantastic job, Mr. President. It is their job to keep you and your administration in check. This isn't personal to you, Mr. President, or your administration. This is their job, period. I don't like the Twitter stuff. I don't like the rhetoric. It's divisive. This country needs to be unified. It's getting worse, not better. All this does is puts a bigger fork in the road. That's all it does. There's finger pointing, blame game to go all around, but somebody's got to step up and say enough's enough. And nobody does it. Economic warfare, trade deal, what's it going to be? Time will tell. Time will tell. But a $7 trillion Federal Reserve balance sheet, 41 million Americans out of work over the past 10 weeks as a result of the shutdown. Interesting times, ladies and gentlemen. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.